Welcome, Auvorians. Saturday. Today is the 8th of August. My name is Steve Vetterl. I'm the CMA of the firm. If you're new to the organization, welcome. We'd love to have you. Join us every Saturday. I am the risk manager of the firm, Series 65. But we can get past all that gobbledygook. Let's get on to the even more fun stuff, like the risk disclosure. Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin and utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. What we refer to in our industry as blowing out your account. So before deciding to trade on the foreign exchange market and using any of our software or alert products, you should carefully and diligently consider your personal investment level of experience and risk tolerance. And I cannot stress the risk tolerance even possibly more than I already do and sound like a broken record. So again, let's do a quick sound check. If you can see my screen, okay, please put in a yes in the chat window. The Q&A window is open. Feel free to ask questions as we go along here. I will take Q&A at the end. As some of you that may have just joined us, I'm going to change the format up as I've done starting last Saturday, which I would highly suggest you go back and look at all of the recordings. They are in the back office of Auvoria Prime on the dashboard. Once you click on your product, on the right-hand side, you will actually see all of the resources to view the past videos, especially the May 30th, where we introduced the high volatility settings. Last weekend, I showed some additional settings. I'm going to make an adjustment to what I showed on the screen. The concern among a couple of people that raised some issues, and actually while I'm done, let me just show the other risk disclosure as well. The concern among some were that the settings have not been tested, but they have been tested fairly extensively. Do note that, and I want everybody to, somebody wants to type this up in the chat window for me, it'd be great. We are changing the stop loss to 500 pips, okay? The only reason in the large euro-denominated Einstein account I trade and the 3K live accounts is that, I should say the only reason we had any loss, which I'm going to show you both, we've hooked them both back up to my FX book, is because we let the 250 stop loss be a yes. So we keep it as a yes, but we're increasing the stop loss to 500. Yes, it will put most accounts into more of a danger of getting into an open drawdown, but it will reduce the danger, in my opinion, of closing drawdown, meaning that it gets taken out of the trade without the trade having a chance to come back. And obviously, when I show a lot of the dollar-denominated currencies in the DXY as well, you're going to see we've had a really protracted move down in the dollar, which has ripped all of the other currencies related to that, or any pair, up, some much more than others. And then correspondingly, all the currencies attached to the ones that ripped on the dollar's decline got hammered as well when things like the GBP and the euro went up. So I'll show some of that as we're coming along here. Let me just type this into the screen here. So 500 pips is the new stop loss on our what's called high volatility settings, which just as simple as HVS is the acronym. All right, so let's go in real quickly, go into the Forex Factory, and then I'll chat just quickly on some charts. And for those that want to just have a quick hit, you could take off, and then I'll get into some more detailed stuff for those that wish to stick around, although I would highly suggest everybody stick around, but you're welcome to just look at the quick hit. So let's take over to the Forex screen next week. Do make sure you're always checking the dates up here. I always get rid of the medium and the low impact stuff, and I just look for the red folders only because they're high impact news stories. So anything related to Tuesday anything related to New Zealand dollar, NZD. Got a big news conference, big press release. Oftentimes there's some Q&A that can go a little bit awry there. That always concerns me about any type of central bank, not necessarily the notes they have coming out. A lot of that has been pre-released to the marketplace. What always concerns me about central banks is when you open up a Q&A, and the Q&A can go good or bad, but it certainly can create volatility and thus potential for loss and gain, I guess, as well inside Forex accounts. So GDP for folks in the UK is coming up on Tuesday. To keep in mind, I have the time set here at 9 a.m. I'm not really sure why that is not syncing with my computer. Let me just switch this over to. Okay, here we go. It always confuses me. All right, there we go. So now we got the times, everything. I try and keep this stuff for essentially New York time when I take snapshots for the notes I put in the back office. So again, stuff for NZD on Tuesday. Be wary of that. Wednesday, unemployment changes. So there's been a fair amount of news, obviously, from the down under, both from an employment as well as central banks the last couple of weeks. I think that should cool out a little bit. Really nothing. I don't really put a lot of stock in this core CPI, consumer price index, although we're probably looking at a deflationary period, hence why the dollar's going down a bunch. But core retail sales, we expect these numbers to be pretty rotten coming up. So the developers are trading this week. If for anybody, by the way, that hasn't seen the Auvoria, the big, if there's ever a recording to watch outside of my Saturday and Tuesday calls and from the other coaches, it's the release of the 4 new products. Okay, so we have Variable, Stratamus, we have Neo, as well as Gearbox, which is Tyler's baby. It's actually really good software. It actually had an excellent week last week. So please go back and listen to the recordings as I get deeper into the research on these EAs and these algos that have just been introduced, and or we're given some MyFX books. In my opinion, I'd like to see some of the developers' live accounts, but that's just me casting, wanting to do a deeper dive into some of the statistics in MyFX, because that really helps cut through the crap. That's why I always show it. So I always recommend you hook your accounts up to it. And anytime you ask me a question, please show me that link as well. All right, so let's go into the charts real quick. What's going on with S&P? Notice I'm looking at a monthly chart here. It's tradingview.com. We're looking at a candlestick chart all the way back on the monthly. So essentially the magnet is probably going to be the all-time highs in the S&P, which is just under 3,400. As many that have not paid much attention to the central banks are obviously flooding us with cash. That makes its way into capital accounts, which thus makes its way into equities, thus improving the value of almost all assets in equity in bond-based land, and that spills over to the rest of the economy. So that's simply a general understanding of how M1 money supply works from a central bank standpoint. All right, so that's SPX. Essentially, we're looking for it to be magnetized up to the 3,400 level. It's going to currency land. So this is a monthly chart of the DXY. And the black line down here is my target price for the dollar. Probably going to make a little bit of a stop in the 90 area, 85.5, 90. But ultimately, I think we're headed down to 85. So the Canadian and Australian dollars are both poised to move higher here, corresponding with moves obviously down in the dollar. Those are also corresponding with moves we're seeing in metals and energy. So as I mentioned last week, the Euro-US dollar target, I actually raised it this week to about 125 to 130. So I'll show a little bit of that. But the important point is that US dollar is poised to head a lot lower here, which should propel things like metals upward, silver and gold, Miners, oil, obviously the stock market. Energy's been somewhat of a lagging group along with industrials and financials, but they may be catching up to that. And the concern for anybody in currency land, and why do I sort of start with other charts and then get into currencies, because many of these charts are leading these currency pairs around. So logically, the next discussion would be for our euro US dollar. And here is my target price, which I'll draw a chart. I'm looking for, this is a big level right here, 125. Or could do a little lower, I guess, right around 125, like right there. Somewhat of a crooked chart, but that's the concern. I would expect us, since we've really ripped a lot of shorts, and there were a lot of institutions short this currency and a lot of others as what's called pin action plays off this, that I would expect. Let me just set this up. Okay. So I would expect this area to be a magnet. So what does this mean in terms of the software? Why do I do all this as a precursor to the software? Because if you're taking trade alerts via Alexander, and then obviously some of the other softwares we come out, they are more, they're more semi-automated than an Alexander is. But if you're taking trades and, we're tearing up into this area, especially just looking at the euro US dollar here, it's going to be tougher for, in my opinion, a martingale-based system to make money if you're constantly accepting shorts while this thing is ripping up. Okay. Now we could spend some time, and again, we're looking at a monthly chart. So let me just drop back down to a weekly. But essentially, here's that level again. We certainly could spend some time basing around here. So far for this week, I should say last week's candle, we're at a doji, which is an indecision candle. See the high wicks and low wicks. It's basically a doji candle. It typically is an indecision-based candle. Doesn't mean we can't continue higher. Looks like we have a little bit of short-term resistance at 119. So, I try to stick real general. I just look at candlestick analysis for now, just looking at the price action of what's going on. I'll begin to get a little deeper on other areas of technical analysis. So we get a little bit deeper into this. At some point, I'm going to introduce the concept of what's called Fibonacci retracements and extensions. So that'll help maybe understand measured moves in the markets. But for now, this is just a good idea of kind of what I'm thinking here. So here's a chart weekly on GBP, USD. Again, obviously dollar following, and this area is lifting. I'm still seeing a target price somewhere in the area of right in here. So let's draw this right there. That would be my target price. Even lift this up a little bit. It's somewhere in this area. So just know that as far as Alexander. Let's take a look at USD JPY. Weekly, finished out on a doji. Not reading too much into this. Looks like so far we've got a pretty decent support area in this area. Right down here. 104 and a little closer to 105. Take a look at Euro JPY, our least favorite currency. I still think this particular area here is going to be a magnet for current price. It's going back up essentially to test, which is a pretty good resistance area back up in this area as well. Now, GBP NZD, this has definitely terrorized accounts over the last couple of weeks because this, remember looking at weekly candles here. So we had a doji, which you typically will see after you have a really protracted or any kind of extended move inside almost any instrument that trades. You will usually have a sort of cooling off period of time. It could be a week, it could be 2 to 3 days. This happens in both indices, currencies, and individual equities. As far as movements, it gets essentially those that got barbecued the most in the trade, in this case the shorts, gives them a chance to essentially with the longs, do their celebrating in the shorts, licking their wounds. So usually they'll have a consolidation period. Doesn't always happen. You had through many of these moves, you had one time framing down. That's where each candle is successively lower with lower lows and lower highs. It's called one time framing down. So far, we've been 3 time framing up on the weekly chart for this. So, you can look at the statistics that typically you'll see, 2-3 candles of one time framing, although we've seen a lot more in the US dollar the last couple of weeks. So we may get a little bit of cooling out. I'm much more willing to take trades via Alexander if we're in a basing period, essentially just relaxing, if you will, and trending between a certain high and low, than I am to be taking trades on a big trend up. And this is where I think some of the other software is going to come in handy, because we really, the last couple of weeks, have needed to have a trending software, essentially taking pullbacks, especially on the euro US dollar, pullbacks down to a certain trend channel, going along that pullback, because it's much less to be fighting the freight train, right? A lot of people get on the tracks, so to speak, and try and fight the train coming through the tracks. I try to not do that, because essentially you're just as short standing in front of a freight train right now. I'd rather grab onto the caboose and ride the tails. So that's essentially what a trending strategy looks like. All right. Let's take a look at the counts. So this is the main ring we trade: Euro JPY, Euro USD, USD JPY. This particular account is one of our live accounts, Luke Roar. Comments on, actually, you know what? Let's show, since we got this hooked back up. So here is the 3K live account. So this thing now is only up about 5.5%. So we're currently in drawdown. So it's taken a beating, and it's still in trades, as you can see, from way back to the 28th of last month. So what I do kind of love about this software, I got to tell you, is that it's just, we're within our range of stop loss, especially since we've lifted it to 500. But even if we were at 250, we're still within the range of the heat, if you will, that we're taking on these 2 trades. But it hasn't given up, right? Because it's looking essentially for a retrace to either get back out of these trades flat. And that's kind of the idea behind the software. Win rates dropped a little bit since we last had this hooked up a couple weeks ago. This was actually, which was probably just my own fault, that worked out well. Since I was traveling a lot, I actually had the software off. So it probably would have more of a drawdown right now than it already does. So can't complain. This particular week, it had a 2.1% return. So it's climbing back out of the hole, as you can see with the equity curve right here. Let's take a look at the big account. This is denominated in euros. We have had, by the way, much less issues with this account. This was off for chunks of the last 2 weeks as well. So it did save us from some of the complete melee that took place in the US dollar drop and everything else ripping up. So looking at, we're beginning to get some decent data, essentially with this. This account's been running for a while. We've taken some money out of it as well. But essentially it was up 1.8% last week. Win rates dropped slightly, okay? Also, you want to note when you're looking at this is to see where the profit's coming from. So again, our stepchild here, the Euro JPY, hasn't really taken any profit at all. It's caused most of the pain in this account, albeit there was some pain here in the last couple of weeks as well. But all in all, most of the profit has come from Euro US dollar. And over time, you will see this change. So if for those that are sick of me talking about the euro, JPY US dollar ring, a lot of other currencies are going to be utilized with Gearbox or Neo, or some of the performance and how variable trades. Okay, so some of the other algos essentially that are coming out. So I purposely, which maybe seems strange, but I purposely have stayed out of the development discussions. I have stayed out of the beta test discussions because I essentially just wanted a final product brought to me. That way I can just assess it just as if I was a regular Auvoria subscriber, but from an institutional perspective. So that's essentially what I'm in the process of doing once we get these hooked up to my VPS. So in a perfect world, I'm going to have a live account to all 6 EAs. You know, some are more some are more semi-automated than others. Some you can be accepting trades, and we'll have essentially a whole marketplace of instances, if you will, that I'll have running all kinds of live accounts. Right now, I know for a fact with Gearbox, it is running a lot of live accounts right now on a smaller perspective, many $500 accounts with a whole bunch of different currencies. So the cool thing about that is we got 1, live money. We're going to see how the real world's testing this out, and 2, a diversity of currencies, which is what I think we've needed from the get-go. But do keep in mind we're just a little more than 4 months old as a firm, so we've done a lot in a short period of time. And I'll tell you, my hat's off to everybody. Seriously, I mean, I've seen startups, dwindle for 2 years before they get off the ground. Maybe not necessarily in multi-level land, which I'm fairly new to as far as an organization, but as far as just getting an algorithm-based software up and trading, and or different iterations of it, I've seen it take a couple of years at some hedge funds. So the fact that we essentially got 4 to 6 products that will be up and live soon, I think is pretty incredible stuff. And as many of you may know, especially in the a lot of the leaders at this organization, I am a tough, super tough sell when it comes to this kind of stuff. So what else do I want to note on the account? So it's currently in about a little bit under 300 euros in drawdown. But all in all, I like what's going on here. Honestly do. This is all that flipped. Actually, let me go into show you guys here. And by the way, this account's doing really well too. This is a different currency ring, but we're running a demo on this one. So I don't talk about this one. This thing's done really well. So here, I'll show you. We don't have this one hooked up to my FX book. So you can see where it's come out. Started the account with 3. Balance is up to 37. Just make sure that's all correct. Let me download all history here. Okay, there we go. Yeah, so balance is 3,700. So the account's done well. We're in a little bit of drawdown here. $300, or essentially $250 of drawdown. But gotta love how this ring's done. I mean, we really have not even messed with this account, by the way. So we haven't gone in and adjusted settings or anything. But again, if we go into our live account, I'm going to show you guys the settings window here. And we are taking this to 500 pips. So here we go. Okay. So I'll leave it on the settings here so you can see what's going on. All right, let's take some questions. Elizabeth, good to see you again. So next week, if you have enough money in your account, I'd be trading at a minimum Euro US dollar JPY. Now just remember, I've left out in a lot of these discussions the Euro JPY. Now there's going to be a time where I'm going to have to pull my foot out of my mouth because this currency winds up doing well. This pair, I should say, winds up doing well. And then I'm going to look like a fool for telling you guys not to trade it. But if you're in a smaller account, You want to keep it to two currencies, I would have that one not on the list for now. Good deal. So Elizabeth said I took your advice last week and made a 2.5% profit. Good to see. Killer. All right. Tim asks, any forecast speculation of potential top coming this week in GBP NZD? What are the thoughts some of us have been on the barbecue? Yeah, no, I feel your pain, Tim. So let's just jump back to GBP NZD. In my opinion, with the exception of anything really bad coming out as far as the monetary policies or something sort of out of line, the reason this currency is getting so tortured is because of the U.S. dollar. And it probably doesn't seem, well, why is that the case? Well, take a look at how much this is ripped. Obviously, it's increasing because the U.S. dollar is going down. But this is, in my opinion, GBP NZD, this is what's called pin action, meaning that when you throw a bowling ball down, you hit the main pin, obviously it's going to take down some of the other pins. In some cases, it'll take them all down, right? That's kind of what's happening right now. So for those trading GBP NZD, I would be paying serious attention, not only to any rumors of Brexit disruptions or waves, if you will, but you absolutely got to watch what's going on in DXY. A lot of yeah, now this is actually a really good question from Damien. He says, I hear a lot of traders preach having a trade journal and track and record your trades. In the instance of using an ELA like Alexander Einstein and having a tool like FX Book to analyze trades, what exactly would you record, focus on in a trading journal, if using one at all? So the only thing I would be putting in a trading journal, and they have both automated and just manual sheets of paper. When I started off as a trader back in 2002 trading equities, I journaled everything. I would print charts out. I have books that are almost a foot thick. In some cases, those huge law binders where I would just put snapshots of what took place. But obviously that was manual trading land. We're in semi-automated land here with our software. So it does a lot for you. The only thing I would just make a note outside of my FX book is when you change the settings, or when you change the currency pairs that you trade, or when you removed a particular currency from maybe a 3-ring pair that you're trading. In the case of maybe Euro JPY, moving that is the ring. But you can also do things like journal, and you could even do this in just an Excel or some sort of Google Docs spreadsheet as well. Just journal what took place, SPY did this, the DAX did this, or whatever your favorite main indice trading did this, the dollar did this. I saw this happen in gold and metals. Keep in mind, when the dollar drops, you typically have a big move up in metals. Not always, but it is sort of the dog wagging the tail and not the other way around. So as we're seeing a drop, and most of the pundits out there are almost always wrong en masse or in the aggregate. So as we've seen a lot of pundits talk about, and the more I shrink up this to an actual monthly chart, you can see where this dollar is more than likely heading, thus ripping gold and miners up. Okay, I think finally, even though I'm not the biggest fan of metals, I know there's just an inordinate amount of people out there, and I run across a lot of clients that are just metal lovers. And I think honestly, y'all are getting your chance to finally get out of some of this stuff in the next 6 months, as this stuff just completely rips higher and brings back some of these big losses I see in client accounts with metals. We're going to be exiting this stuff and not have as much or that heavy exposure in metals and client accounts. I'm not a fan. So that's a tough question to answer. Will Einstein trade the trend? That's a tough question to answer. I wish it would more trade the trend. Take a look at the next question. Any idea how much longer we have to wait for the new software? That's a great question. I don't know. I've purposely kept myself in the ignorance camp on this new software, because when it hits, it hits. I don't know if anybody wants to comment in the chat room for everybody out there, maybe of an idea. Most of the releases of products from any type of company on this planet is almost always delayed. Okay, So I'd rather promise very little and over deliver. Yes, for those that just entered late, we are moving the stop loss for those that can handle it. That's the key thing here. Can you handle it? You know, oftentimes when I get emails from people and I dig a little deeper into what they've sent me and or a couple of corresponding emails, I find that they truly could not afford, in almost all cases, to not lose the money that they were asking me about. So it came back to, once they started losing money, all of a sudden they said, well, oh, geez, maybe Steve was right. Maybe I could not afford to lose this because it's making me have sleepless nights. If you're having sleepless nights about large chunks of money being traded in anything or invested, you probably don't have the tolerance for it. So you can build the tolerance if you just mind over matter. So this is what in the onboarding videos you saw Josh Fair, our CFO, talk about extensively last week. I am actually going to be running about 5 minutes, probably going to at least take that, on just trading psychology. And it really is just about whether you're a manual trader or you have some semi-automated system trading like ours. You still have to build the mindset of a superstar athlete. You know, there's going to be times where you blow it in the Super Bowl. You know, there's going to be times where you have just tremendous victory, and you must maintain risk in the mindset to be able to handle both. One thing I promise you is absolutely the same in all top manual traders on this planet, and some of them have billionaires behind their name. That's how well they've done, is they all have an absolute killer psychology in being able to handle loss. You know, I talk a lot about the story of Julian Robertson, right? You can Google it if you want. He used to run a huge hedge fund called Tiger Management, spun off a lot of other billionaires out of what's called Tiger Cubs from his fund. But the guy's ability to handle massive loss was just unbelievable. You know, you never know the guy had a $230 million loss that day. As many of his friends would always talk about when they go out to dinner or whatever with him. That's the kind of killer mindset that you need to build, in my opinion. Even though the software is doing a lot for you, you know, these aren't set it and forget it. You know, at some point we're going to have a couple of softwares, you know, where you can't really change the setting. And, you know, I still don't think those will be set it and forget it, right? You still have to monitor what's going on because, you know, risk management dictates that one always pay attention to what's going on. You know, I mean, think of yourself. I make a lot of F1 analogies, but think of yourself as you know, you have the team that builds the car, you have the team that runs it around the track, you have the analysts, you have the driver, obviously, the coaches, the team owner, the manufacturer. You know, they all play an important part. But you know, you may have the best driver in the world, but if they don't exercise risk management, they're going to, you know, tear around every corner and wind up crashing, you know, a multi-million-dollar F1 car. It's the same thing in trading, you know, maybe for the lack of a better analogy. You know, the software is the car, you know, but you guys are the heroes, in my opinion, because one, you're getting exposure to some great software, but it still takes some time and settings to make sure that it's running around the track right at an efficient pace and generating profits with little drawdown. All right, so it looks like we got a couple of people saying they had some gains from my recommendations last week. Good job. Let me just delete these. Next question. DXY is the dollar, Kathy. Google it. I highly recommend, I do not own TradingView, but I highly recommend everybody spend, you know, what is it, $15 a month. I think you can pay $120 a year for the software. Stuff's killer. It's really easy to use. No worries if you're new, guys. Yeah. But if you're new, I promise you, Tim, please go back, do yourself a favor, and watch some of my previous chats. It'd be really good for you. Got it prop 2 weeks ago and didn't end up trading this week. Would you suggest turning Einstein on this week with an account balance of 1,300? Yeah, but with an account balance of 1,300, by the way, I would only be trading one currency. Don't know the start date for the new software. Do any books you recommend reading for your beginning trader? In my opinion, the books to read for a beginning trader. Here, I'll show you. So you guys are going to see me talk about Brett. Google Brett Steenbarger. Okay. So Brett is, he's an acquaintance. I mean, I wouldn't call him a friend. This guy's so busy, it's unbelievable. So he is the most in-demand psychological trading coach on the planet. And he'll oftentimes take, 2 to 3 years of work with a particular hedge fund. So and just basically builds like, he's very similar to the role of Wendy in Billions. I'm sure if you guys have seen that. Although he's a much nicer guy. He's more of an actual doctor. But in any case, Brett has a number of books out. You can read any of them. Trading Coach, Trading Psychology. There's a guy out there by the name of David Hirschhorn. He's actually written one called The Trading Athlete. I always get this guy's last name spelled wrong. Let's see if I got it right. Hirschhorn. Yeah, forget it. If I remember it, I'll actually have the book on my shelf. I could take a picture and post it on the channel if you guys want. Those are the books I would recommend to start with. Then you want to move into technical analysis books, in my opinion. David Nilsson Candlestick Charts, next book. If you guys want, I actually have, I'm not going to dig it out now, but I have like a huge library of ebooks. Not sure if I'm allowed to post a link to this or not, because that would probably be copyright infringement, right? But I have a number of ebooks that I'll maybe just take a snapshot of the list and recommend to everybody. Yeah, you're welcome. All right, so let me. Yeah, the guy's David Hirschhorn. I always get that name spelled wrong. I don't have the book. It's buried in a box somewhere. I have to look it up. It's called The Trading Athlete. Let's see if we can find it. Yeah, here it is. So this is the book right here. Doug Hirschhorn. God, I didn't get that straight. This is actually a really good book. He talks a lot about, in this book, how, or I should say, the reasons why NCAA Division I top athletes make fantastic traders, because they have that sort of killer app in their brain of being able to move aside and learn a particular process and just execute like a robot, and not have emotional ties to it one way or the other. That's what this book talks a lot about. Should we be selling Euro US dollar? I did well buying this past week. That's a crystal ball question, Kerry. I don't know the answer to that. All I can say is that we've had a huge protracted move in the US dollar, the Euro US dollar up because the US dollar fell, as you can see with this DXY chart. I'm expecting the DXY to drop towards 85, thus making almost all currencies attached to this in some form or another go up. Now, does that mean that's going to happen Monday and run all week? I have no clue. It could be completely dead this week, and I could be like totally wrong, right? We can only look to see what the macro marketplace looks like, or the macro market view looks like in terms of forecasting. Yeah, almost all forecasters are always wrong at some point, right? What do you recommend setting total account equity risk for to 30K account of investment capital, meaning not next month's rent? I would have it look like this. Okay. So 0.01 per, listen carefully, 0.01 trade. Actually, let me jump into the screen here. 0.01 starting lot size per 3 to 5K. Does that make sense? This is so 5K would even be even higher than our conservative Einstein account, and making sure that you flip-flop these two right here. These are what the settings should be look like. That essentially is conservative settings. We call it high volatility. Trading stop loss, 500 pips. had we done this, right? Again, I'm still learning just like you guys, right? Had I done this inside these accounts, we wouldn't have any drawdown right now. Can't say any. We wouldn't have that much. It'd still be in drawdown, but it wouldn't have taken this trades and just gotten out of the market, right? And make sure that 30K account of investment capital. What you may want to do also before you deploy that is take a look at the other softwares that are coming out. Maybe put 10 in each, 10 in Neo, so forth. Somebody missed the beginning of the meeting. What currencies are you trading this week? We always trade the same ring. At least that's what I show here, Marty. Let's trade the Euro JPY, much to a lesser degree here, this one. But I do trade Euro USD and USD JPY. Doesn't mean that's what you have to trade. There's 25 currency pairs out there. I choose to trade only the majors, which is about a third of that list. And but for right now, the softwares are running. I've tried not to step in front of my own way with this software in terms of how it runs. Just leave it alone. So that all depends. Stop trading for news. We have, let me open this back up again. So here's the stop trading for news setting. We have it on yes. We've always had it on yes. And it's always been 15 and 60. Some turn it off. Yeah. Some people run all week and they choose to run all through all kinds of news events. I just, statistically, the win rates of trades, and I don't care what system is running, unless you're a huge Wall Street hedge fund that's got this stuff wicked dialed in. Outside of that, almost all algos that I've seen have a statistically much lower win rate on trades that are taken during news, because there's really no rhyme or reason in these moves. And a lot of them are just complete reactionary craziness in some of these moves. So why would I want to be trading during that? Well, a lot of people say, well, what if you catch the right side? Certainly a good argument. I'm not as concerned of catching the right side as I am very concerned about being on the wrong side, which is the core of risk management. Something you'll see in both of those books. Some of the best traders out there, whether they were standing in the pits of the CME, trading live on the floor of an exchange, or some sort of electronic trader that is running at a larger trading organization, one thing they all have in common outside of that killer app and that mechanical execution type mindset with no emotion is that their number one thing that they exercise is risk management. Period. Yes, so you can diversify a 100K account in various new softwares, which is absolutely what I would do. Now, a number of them have nothing you can change, like Neo. Okay, you can't do anything to it. You just set it loose on your account. But it's a very conservative system. It doesn't have a lot of drawdown. I'm more in tune with understanding Neo and Gearbox than I am the other two. Okay, so I'm not as familiar with the other two, even though I've seen the presentation twice. Watched the recording. I'll probably watch the recording again, but I haven't looked at I haven't done a deep dive on them yet. .01 per 3 to 5K based on how many pairs? That would be 3 pairs. Now, keep in mind, this is Einstein-Alexander settings. These aren't settings for any of the other softwares, okay? Gearbox has an entirely different set of stuff, okay? I'm not going to get into. At some point, I can touch about it, but Tyler's going to run that call each week, I assume, and give you guys detail about all of that. So the .01 per 3 to 5K is based on 3 pairs, not 2. I'd want more diversification in that size account. Can run more. Now keep in mind, some of these other softwares run 10 pairs, you guys. So some run 6, much more than just 3. But you'll often find, when I think if I read that right, with some of the other softwares, the majority of the profits come out of one or two of those pairs, and there's not as many trades taken on the others. Way back in the early 1990s, Anonymous is when hedge funds started building algos to automate trade the markets. It's actually pretty fascinating if you guys want to Google it. All right, so we're a little bit before 10:50. If anybody's got any questions, comments, and anything, please put it in. I always love the leaders say, put in, what is it, the 3 7s, 777? Maybe someday somebody will tell me what the hell that means, but put in the 777 if you liked this presentation. Thank you to all. Spread the word as always. I sound like a broken record, but for gosh sakes, everybody should attend the coaching calls. Watch A Day's Ace stuff. You're going to be forced to with new subscribers, as you guys may know. Once we get the onboarding up and running, it's great. You're going to listen to 3 to 5 minutes from Susan, me, Sal, some of the other leaders, some of the other coaches. It's going to be great stuff. Josh is going to talk a little bit, and you have to make it through all this, which I think is absolutely critical, and get signed up for the right Telegram channels in order to be able to use the software. I think that's fantastic, because this business can be tough sometimes, like herding cats. So please do yourself and your team the favor of, at the very least, communicating what I'm talking about, but most importantly, have them watch the recordings. All right, guys. Today's the 8th of August. I am Steve Vettel. This is the Saturday forecast call for the week. I wish everybody well. Let your hearts not be troubled. We will get past this coronavirus thing if you choose to believe it truly is a pandemic. But watching the news media and most of the inaccurate information that comes from the media, I would not suggest absorbing. With that, I tell everybody, have a great week. Steve Federal, off the mic.